Mr. Chairman, today we'll hear from the OCC, the FDIC, and the NCUA about their recent regulatory actions. So I want to welcome all the witnesses, with a special welcome to Chairman McWilliams, for whom this is a homecoming of sorts, given her distinguished career as a senior staffer on this committee. Throughout the pandemic, I've been encouraged by certain modest, targeted regulatory changes to support the financial system. However, as the pandemic recedes, I'm now concerned that the Biden administration is seeking to use financial regulation to advance social goals that are unrelated to banking, and its agency heads are contributing to the politicization of banking regulation without providing independent analysis. Such a shift would erode the long-standing nonpartisan objective of having independent regulatory agencies. As one example, the administration's executive order, or EO, on climate risks seeks to use financial regulation to further environmental policy objectives. Under the guise of, quote, assessing risk, unquote, the EO directs the regulatory agencies to undertake a range of actions, including the consideration of new or revised regulatory standards. But if the actual purpose was to assess risk, wouldn't it logically follow that actual analysis occur before jumping ahead to a policy response? This is the crucial point. The EO doesn't seek a neutral inquiry. Instead, it presupposes the conclusion that there is, in fact, specific climate-related financial stability risk that's not being properly accounted for by either institutions or regulators, and it pressures supposedly independent agencies to enact backdoor environmental policy without appropriate accountability and while these agencies lack any expertise in environmental matters. I'm concerned that some agency heads are willingly participating in this politicized effort. For example, last week, Acting Comptroller Sue announced the OCC would join the Network for Greening the Financial System, or the NGFS, an international organization whose stated aim is to, and I quote, mobilize mainstream finance to support the transition toward a sustainable economy, end quote. In other words, to have government allocate credit, which is antithetical to a free enterprise system. At a recent FSOC meeting, NCUA Chairman Harper helpfully ceded the point by asserting that credit unions, and I quote, will need to consider adjusting their fields of membership or altering lending portfolios, end quote, as a result of climate risk. But most credit unions are small institutions that serve their local communities. The suggestion that their fields of membership need to change because of climate change doesn't result from any actual risk assessment. It's simply based on politics. I'm also deeply troubled by the administration's apparent unwillingness to nominate an individual, perhaps at any point, to serve as comptroller on a full-time basis. By installing Mr. Sue as acting comptroller with no nominee in sight, the administration appears to have every intention of indefinitely bypassing the constitutionally required Senate confirmation. Now, 4 years ago, some Democrats expressed outrage that an acting comptroller was appointed. They wrote that, and I quote, the comptroller must be nominated by the president and confirmed by the Senate, end quote. Now, in that instance, the acting comptroller had only served for a grand total of 1 month before a permanent nominee was in fact sent to the Senate. In contrast, Mr. Sue has served as acting comptroller for nearly 3 months, and we've not heard anything about any permanent nominee. Yet I've heard no complaints from my Democratic colleagues about this fact. Rather than pursue social goals unrelated to banking, regulators should be looking for ways to increase competition and improve regulatory efficiency. Last month, the administration issued an EO that's purportedly intended to increase competition. But upon closer look, the EO would only make it more difficult for small and medium-sized banks to merge, when doing so actually presents opportunities to compete more effectively against very large banks. The EO would therefore actually decrease competition within the banking system. If the administration were serious about promoting competition, it would seek to reduce the regulatory burdens imposed by Dodd-Frank, which have contributed to an unbelievable decline in de novo banking activity over the past decade. According to the FDIC, between 1985 and 2011, the first full year under the Dodd-Frank Act, 183 new institutions were chartered every year on average, 183. In the period from 2012 to 2019, prior to the pandemic, we averaged 4 new charters per year. Now, I'm encouraged by the FDIC's work in this space under Chairman McWilliams, including revisions to the agency's process for reviewing deposit insurance proposals. These changes, I believe, have contributed to an uptick in de novo banks before the onset of the pandemic, but I think more can be done. And I'm concerned that rather than facilitating de novo activity and encouraging innovation, Acting Comptroller Sue has suggested that he'll reconsider the OCC's recent approvals for national trust banks that provide digital asset custody services. Now, these approvals were granted after extensive engagement and analysis, and they bring digital assets into the regulated financial system. The reality is the banking system is changing. Banking is changing, and new products and services offered by innovative companies offer tremendous potential benefits for consumers. Regulators should want these innovative financial institutions to enter regulated financial system, and that would make it easier for them, which would make it easier for them to become banks, for instance, add consumer protections, increase safety and soundness, reduce risk. So I hope to hear from today's witnesses about how they will maintain independence in the face of pressure to politicize banking regulation, and I look forward to discussing steps their agencies are taking to increase competition, promote innovation, and improve regulatory efficiency, which will ultimately result in a stronger banking and financial system for all Americans. Thank you, Mr. Chairman.
Thank you, Senator Toomey. I'll introduce today